Welcome back. On the surface, this week looks kind of quiet, but don't let that fool you. There is one massive, and I mean massive, event that's set to dominate the entire financial landscape. All right, so what is that one single event? Well, we're going to get there. First, let's start on the outside and work our way in. We'll look at some really confusing signals coming out of crypto, growing fears around an AI bubble, and then we'll funnel down to the one decision that could pretty much define the rest of the year for all of us. Okay, first up, crypto. What is going on in the crypto space? Right now, the big dogs, the institutional players, they are sending some very confusing and frankly contradictory messages about where they think this whole thing is headed. So if you look at the Chicago Mercantile Exchange, the CME, which is a huge hub for the big institutional traders, one of the key indicators is just flashing a massive warning sign. Okay, and this is where it gets really interesting because you've got this total contradiction, right? On one side, you have falling open interest on the CME. What does that mean? Well, in plain English, it means the pros, the professional traders, are closing out their short-term bets. They're basically stepping away from the table. But on the other side, you've got corporate treasuries. These are the companies holding Bitcoin on their balance sheets for the long haul. And guess what? They're still buying. They didn't sell a single coin last week. That shows some serious long-term conviction. So you've got this battle, short-term jitters versus long-term belief. Who's right? And you know what? If we look over at the ETF flows, the picture just gets even muddier. For Bitcoin ETFs, sentiment's been totally flat for 2 weeks. And what's really notable here is that a giant like BlackRock has often been leading the selling, which just puts a lid on any kind of positive momentum. Interestingly, Ethereum ETFs, they're looking a little more stable. You might even call it a positive neutral trend. So, yeah, confusing. All right, let's move on from crypto for a second and look at another area that's just filled with uncertainty, AI. There's this growing, I'd almost call it hysteria in the media around a potential AI bubble. And man, the headlines are just getting more and more dramatic. I mean, take a look at The Guardian. They're not even asking if it will burst anymore. Nope, they're just stating it as a fact and asking, okay, so what are the consequences going to be? And the language, the rhetoric, it's definitely escalating. Fortune magazine recently ran a headline warning of the potential for chaos, all caps. They're suggesting that if this AI bubble pops, it could cause massive disruption across the entire market. But here's the thing. This is where we see a real disconnect between what the headlines are screaming and where investors are actually focused. Yeah, the media is all in on AI, but a recent poll shows that investors, they're actually more worried about geopolitics. Now, that being said, look at the chart. 1 in 4 investors still see the AI bubble as the single biggest threat out there. So the fear is definitely real, even if it's not number 1 on the list. But okay, there's an unexpected wildcard this week, something that could impact everything from inflation to corporate profits, and it's coming from a place most market watchers aren't even looking at: the U.S. Supreme Court. Yeah, that's right. At any moment now, we're expecting the Supreme Court to issue a ruling on a case that challenges those Trump-era tariffs on a bunch of imported goods. This case was brought by huge retailers like Costco, and believe me, the outcome could have a surprisingly immediate ripple effect on the whole economy. So why does this matter so much? It's all about the potential chain reaction this could set off. Check it out. If the court strikes down the tariffs, bam, step 1. What happens next? Well, prices for a whole range of imported stuff would fall. That means you and I and businesses pay less. And when prices fall, what does that do? It eases inflation pressure. It directly lowers those key inflation numbers. And that gives the Federal Reserve some unexpected help in its fight against inflation. It's basically a legal decision that could directly and powerfully impact what the Fed does next. Which, of course, brings us to the main event for the week of December 10th. The big one, the Federal Reserve's interest rate decision, and, just as important, the press conference with Chairman Jerome Powell that follows. For weeks, there was a ton of uncertainty. You had different Fed officials sending completely opposite signals, and investors were just scratching their heads, wondering if another rate cut was actually coming. But then a key statement from a Fed insider just completely shifted expectations and locked in the market's view. And this is the result: a whopping greater than 90% probability that the market is pricing in for an interest rate cut this week. I mean, that is an absolutely overwhelming consensus. So when you see a market-priced probability this high, what does it really mean? It means the collective wisdom of millions of investors, all putting real money on the line in the derivatives market, is almost certain of an outcome. It is incredibly rare for the market to be wrong when the consensus is this strong. And that also means if the Fed somehow defies these expectations and holds rates steady, the consequences could be pretty severe. So, okay, with the Fed's decision just around the corner and the stakes being this high, how does all of this fit into the bigger picture for the end of the year? Let's zoom out and look at the historical context for a second. So, historically, right now, we are just entering what is usually the weakest part of December for the NASDAQ. This little dip, this period of underperformance, typically lasts until about the 19th of the month. And right after that, that's when the traditional year-end Santa Claus rally is supposed to begin. And where does the Fed's decision land? Smack dab in the middle of this historically choppy period. And that, right there, is the big question hanging over everything this week. It really feels like the market's on a knife's edge. The Fed's decision isn't just going to be another headline. It could be the single domino that determines whether we see that traditional Santa Claus rally, or if this is the year that history decides not to repeat itself. So what's it going to be? We'll find out soon enough. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.